Good day, guys. How are we all doing? I hope we're all good. So, I just saw a picture perfect example of a TDI squeeze, and I thought let me do a quick lesson to show you guys how to actually trade a TDI squeeze. So, first things first, you want to identify if your TDI actually has got the squeeze. So, a squeeze simply means if your TDI volatility bands are open like this. At some points, they'll come back together like this, and the baseline bounce will be in between there. And then at some point, they are going to open either going to the downside or to the top side, and the green line is going to break out of that TDI. Usually it breaks out to the bottom or it breaks out to the top side, like what happened here. So the first thing you want to identify is which side of your static 50 is the squeeze happening. So if the squeeze is happening whilst the TDI is above the static 50 and it breaks out to the bottom, you know that you've got a signal to actually sell. When it gives you a signal, the next thing you look for is a setup. So it's signal first, then a setup. So TDI is basically showing you that from this squeezed volatility here, there is now volume coming into the market and you are anticipating an expansion of price in the direction of the breakout. So if you put a vertical line where this green line actually breaks out, you will notice that it was actually confirmed by this huge bearish engulfing here. So all this is after this candlestick closes. So don't worry about trying to catch price or trying to get in before the breakout is confirmed. So soon as this is confirmed, you can see here we're already outside. We can see this was a squeeze. The bands are starting to open here. You then focus on your H1 candle, right? You focus on your H1 candle. You are looking for the same exact candles we look for when we trade. You're looking for a pin bar, bearish engulfing, inside bar, or doji. So here we get a doji, which also looks like it's a pin bar and it's bouncing off the 13 EMA, confirming the selling bias, right? So once this is confirmed, you want to mark the close of that candle. Just put a line or whatever you can put. Then you want to go to M15, see what your M15 has got. So on the M15, you will notice that from this high, you actually had a push down, a retracement, a push down, a retracement. So price is already starting to show you lower lows and lower highs, breaking structures to the left, showing us that price actually wants to be bearish. So here we've got this nice inside bar already confirming the sell before that pin bar even closed. So at the close of the pin bar, the price was right here. So at that point, you can still enter a sell right here, or enter a sell right here and put your stop loss outside the range, then aim for your normal 1:2 or 1:3 risk to reward ratio, or you can go to your entry time frame, which I usually prefer, which is my 3-minute time frame. So on the 3-minute time frame, I'm simply looking for one thing. I'm looking for price to retrace back into the 13 EMA for me to get an entry. So you will notice here where these dots are. This is where our pin bar closed on H1. I come to M15. That means I could have entered here. Or I can simply wait for price to retrace back into the 13 EMA and wait for the same exact candles, which I always mention. So here we get a nice bearish engulfing. This here for me is a clean entry. Stop loss outside the last high of your entry candle. Then you can see from there, this price just melted. There was just a little bit of drawdown this week here. But besides that little drawdown, price simply melted all the way from 29.20. All the way from 29.17 up to around 28.97. I like my numbers to be like a whole, so that would have been a nice setup. So I just thought, let me show you a clean example of something which I just saw when I looked at the charts just now. So for now, I'm looking at a setup on gold actually. But then it's a holiday in USA, so maybe the markets might not have enough volume. As you can see, we've just been pushing sideways. But I do have a bearish bias with a scalp trade potentially coming back to the 200 EMA. You can see here now price is trading in between the 50 and the 200. So I have a range to work with. So if I can get a scalp trade, I might just consider a quick scalp. But otherwise, it would be best maybe to wait for tomorrow, wait for the US holiday to pass. Then we can actually start to look for better setups. So that was an example of a squeeze. Let's just scroll back. Right. If a squeeze happens like this, half your TDI is above the 50 static, which is this level here. Half your TDI indicator is below the 50 static. Simply wait to see where your price is going to break out on. So we had a fake out here. Price fell back into this range. Then a clean breakout only happens here. Right. So as soon as this breakout happens, same thing. You just want to put a line on where the breakout occurred. Once you put a line on where the breakout occurred, this was the 10th of Feb. You want to go to your M15 on the 10th of Feb. You go to your M15, you're looking for confirming candles, right? So remember, this is where it happened. When you're on M15, you see that price was still, how do I put it? Was still pushing slowly back into the 13, and we had a nice pin bar here. Here, there is no need to even go to the M15, soon to the M3. Soon as you see this pin bar, because it's happening right on the 13 EMA, and because we already know where our TDI is breaking out of, and we have a bias, you can simply just take your buy at the close of the pin bar. Then you can put your stop loss below that pin bar. Then you can just aim for your normal 1:3. By here, your trade will already be done. So that's another example with another variation whereby the TDI is half on top, half below. Let's see if we can quickly just get another one. So it's, if you are day trading, it's nice just to get these squeezes, on the H1. Here's another one. Already you can see gold is showing most of this setup. So if you're a gold trader, this is for you. Maybe you might want to throw the TDI indicator on your chart. So again, here's a little squeeze here. Right here, it's happening below the 50 static. The whole indicator at this point was below. We get a breakout, put a vertical line and mark where the breakout is occurring. Once you mark where your breakout is occurring, okay, we're just going to say it's this candle here. This is the 28th of Jan. Let me see if I can quickly scroll there. 28th of Jan. Then you check M15 for an entry candle. Best entries always happen if your M15 taps the 13 EMA. But if you notice from here until almost the close of the day, there is no interaction of price with the 13 EMA. So up until here, if you see that your price is pushing without you, first thing you want to look for is any pin bar candle forming as your price is taking off. So this for me qualifies as a pin bar. So as soon as you see it form, before it even closes, you can go to your 3-minute and look for an interaction of price with the 13 EMA, look for the same candles and look for a buy. If this is not too clean for you, wait for price to push. Here's another pin bar. Before it even closes, this price is pushing up. Same thing, just go to your 3-minute. You definitely get an entry in here and you can take a buy. And again, here's another one with price actually retesting in order block. So there's many points of interest which you can actually use. So I think with those 3 examples, that's it. This is a very quick lesson. If you see a TDI squeeze happening on H1, if you are unsure, just let me know. Then I can confirm for you. Then we can just both enter the trade if it's a high probability setup. So that's it for me today. Enjoy the rest of your day. Good trading.